5 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. An end in sight. Democrats concede on healthcare, setting up for a potential government reopening. Those headlines improving risk appetite, plus Visa and MasterCard adding to market optimism this Monday. And mixed chip signals. TSMC's October sales grow at the slowest pace in 18 months, even as Nvidia asks for more chip wafers. So after a down week last week for stocks, we have a lot of rebounding to do, and it looks like we might be just trying to do that this Monday. S&P futures pointing to a gain of 1% at the open, Nasdaq 100 futures 1.5%, and more than 1% for the Russell 2000 as well. In fact, we have strategists already talking about next year's earnings season, with just 8 companies this week set to report. Plenty of Fed speak, though, so let's take a look at the bond universe, because we are seeing a little rise across the curve in yields. The 2-year yield still below 360, but that 30-year yield back up to almost 473, and the 10-year yield firmly above 412, close on 413 right now. We also have gold back above $4,000 and Bitcoin rallying once again this Monday morning. All right, let's get to some individual movers. Over to London and Valerie Teitel. Good morning, Valerie.
Good morning, Bonnie. Let's start with a check in the tech space. Nvidia up 3.5% so far in pre-market trade on this optimism around the U.S. shutdown ending this tech slide of last week. Nvidia was down some 7% in last week's trade. It's undoing half of that loss with this pre-market move up 3.5%, but broadly, tech is in the green across the globe. Next, let's move on to some M&A activity. Pfizer is set to buy Metsera for a deal that could be valued as much as $10 billion. Now, this is a very interesting price action that we're seeing here. Pfizer is little change, up just 0.6%. Novo Nordisk, who they did beat out for this deal, those shares are up 1.7%, but Metsera in the red, down 15%. Bonnie, I think there was some expectations by the market that Novo Nordisk would keep this bidding war going for the obesity startup Metsera, but with the lack of a counter bid from Novo Nordisk over the weekend, we're seeing those shares of Metsera in the red, down 15%. Lastly, let's talk about the tech trade Rumble. This is a conservative-backed video hosting company, up some 16.5%. They have agreed to acquire a German AI cloud company called Northern Data, as they're looking to boost their global AI capabilities when it comes to cloud hosting. Remember, Rumble does host Truth Social. That's Donald Trump's favored way of telling us his opinion and his views on things, but Rumble shares up 17% on the back of this acquisition. Bonnie?
Yes, that Rumble, not to be confused with the boxing franchise. Valerie, thank you so much. Valerie Teitel there in London. And later this hour, Sonja Marten of DZ Bank joins us to discuss the market's pretty pessimistic view right now of the economy. The shutdown offering no relief for treasuries as they rise across the curve after the Senate plans to vote on the plan. Joining us now is Bloomberg's Morwenna Coniam. So, Morwenna, we're looking at a positive reaction in equities. Does that continue even as we await plenty of procedural votes and potential hurdles?
Yeah, so far it has been a very strong reaction in the equity market. Over here in Europe, the Stock 600 is about up 1.4%. That is led by tech, as we often see on these more bullish days, but also really all of the sort of economically sensitive sectors are rallying this morning. So financial services, a lot of commodity-linked sectors, so miners and energy shares are all higher. Positive across the board really as well. We're seeing that reflected in US futures as well. So we are expecting that rally to continue this morning as well.
We're seeing it in Bitcoin too, although Bitcoin might be a separate story. It rises pretty much every weekend, it seems. Gold, though, rising again above 4,000. It's normally a haven asset. Is this a little hedging as well, just in case?
Yeah, that's an interesting one because, as you said, I mean, haven assets like treasuries are actually falling this morning. I think with gold, it has suffered a little bit with a pullback since it reached those record highs. So we're seeing a bit of that coming back. Particularly as with this shutdown potentially out the way, traders are starting to look towards, well, what's next? And that is the prospect of a Fed rate cut, because once we get this next tranche of data that people have been awaiting, really not quite sure what's happening, if it shows a weakening labour market, then that could put that really on the table. Markets now currently pricing in more than a 50% chance of a rate cut in December. So I think obviously as gold is not interest-bearing. That plays into gold's favour. And we're also seeing silver creeping back up again as well. So quite a strong performance there in precious metals, and that is also being reflected in those precious metal mining stocks this morning too.
Yeah, so the VIX is back below 19, but any one senator could potentially force delays for days on this, Morwenna. Is the market being a little too optimistic? Would we see a meaningful retracement, say, of any equity positivity we see this morning if this goes into next week?
I think there is that certainly a bit of a sudden reaction this morning because, as you say, some of that uncertainty seems to have been potentially removed, but it does still linger. There is no absolute certainty of when this will happen or that it will happen, and that is something we may see a bit of a pullback. And the volatility is likely to, creep back in potentially. I think certainly people will not only be, waiting to see any signs that this is definitely going to happen next week, but also what that data shows, and that's obviously a whole other load of uncertainty as well. So it's certainly, I think, too soon to be completely certain of what's happening. But we'll also have further earnings coming in, which could bolster that equity market further. Everybody's very hotly anticipating an update from Nvidia again, and that could become the driving force once again.
Yeah, plenty of catalysts once again this week. Morwenna, thank you so much. That is Bloomberg's Morwenna Conium. In Washington, President Trump's suggested tariff dividend of at least $2,000 been clarified a little bit by Treasury Secretary Scott Bessent on ABC.
The $2,000 dividend could come in lots of forms, in lots of ways, George. It could be just the tax decreases that we are seeing on the president's agenda. No tax on tips, no tax on overtime, no tax on Social Security, deductibility of auto loans. So, those are substantial deductions that, are being financed in the tax bill.
Joining us now is Bloomberg's Brendan Murray. So, Brendan, it doesn't sound like we're going to get checks or anything for $2,000 in the mail unless the Supreme Court overturns these tariff rules, right?
Yeah, exactly. It sounds like Treasury Secretary Bessent was surprised at what the president posted on social media on Sunday about this $2,000 rebate to consumers. Of course, this follows the Supreme Court hearing in the middle of last week, where a lot of skepticism was thrown on President Trump's ability to deploy these tariffs that he has around the world. And so it sounds like to a lot of observers that the president is feeling a bit insecure about his ability to use those tariffs going forward. He sort of lashed out and called anybody who opposes tariffs fools, and is trying to sort of sway public opinion back in his direction by floating this $2,000 tax giveaway to consumers.
Elsewhere, let's move to China because things are moving on a number of fronts related to China, one of them being these drug precursors to North America that are so contentious, obviously, fentanyl and so on. But it's now telling companies they need to be aware of laws when exporting chemicals. Is that going to help?
Yeah, exactly. So I think what we're seeing is this trade showdown between the world's largest economies is slowly de-escalating step by step. And this is another issue that the Trump administration has been pressing Beijing on. These chemicals that go into making fentanyl, they put a specific tariff. It was initially 20%. Today it comes down to 10%. And so this is just another step in the direction of the two sides carrying out the pledges that they made a few weeks ago in Asia, the two leaders, toward this one-year-long truce that begins right about now.
You have to wonder if these 13 precursor chemicals are all bad or if we actually need some of them as precursors to some drugs that get made in the United States. But moving to shipping, because China has also stepped back from shipping investigations, tensions easing there too.
Yeah, exactly. These were skirmishes in the broader trade dispute between the U.S. and China, and the U.S. Imposed tariffs and fees on Chinese ships and Chinese cranes, and investigated Chinese shipping industry, and Beijing did the same. And so what we're seeing is those reciprocal reactions being unwound now, and a bit of the added costs of shipping to the U.S. and to China being lifted, at least for the next year, while this truce is carried out.
So that's good, at least, Brendan. It should help in terms of inflation and so on eventually. Where should we look to next? What's next in the improving relations, as you say?
I think the main thing to watch for now is how does the trade relationship fundamentally change, if it does at all. We are looking at statistics today that show that U.S. Imports, overall imports, not just imports from China, are going to decline in the double-digit percentages for November, December, and into the first quarter. So the question is, the tariffs, many of them are in place. Some of them have been brought down, and there are exclusions to others. But President Trump has set these tariffs in place, and they are going to have an effect on the overall volume of trade. Now, the big question then is, what does the Supreme Court do? We'll get a ruling from them probably in the next several weeks. By year end is what some of the attorneys involved say. So that could throw a whole new layer of uncertainty into the equation as to how would President Trump carry out the trade policies that he wants to without those reciprocal tariff authorities.
All right, Brendan, thank you so much. That is Bloomberg's Brendan Murray, trade czar there in London. Now to other top stories trending on the terminal this morning. Diageo has named former Tesco and Unilever executive as its new CEO. Dave Lewis, who is known for his turnaround of British grocery stores Tesco, will begin in the role on January 1st. Shares of Diageo, maker of Johnnie Walker and Baileys, surged on the announcement. Visa and MasterCard are said to be close to reaching an agreement on a 2-decade spat with merchants. According to sources, the deal would involve making changes to lower interchange fees and loosen rules that require merchants to accept all Visa or MasterCard credit cards. Both companies declined to comment. And the BBC's Director General, Tim Davie, is resigning amid allegations the broadcaster misled viewers on remarks by President Trump. The remarks were in a documentary that aired in October of 2024, where sections of a speech Trump made on January 6, 2021, were spliced together. The controversy comes ahead of critical funding talks with the UK government. Coming up, US shares of TSMC climbing despite a slowing monthly sales number as Nvidia chases more chip wafers. More on all of that next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. TSMC higher in U.S. pre-market trading, even as the Taiwanese chipmaker posted slowing monthly sales growth. That's all after Nvidia CEO said he had asked TSMC for more chip wafers to meet strong AI demand. For more, Matt Bloxham of Bloomberg Intelligence joins us now. So Matt, walk us through these monthly numbers first. We had been seeing numbers in the 30% and 40% growth range, and we're now down to 16.9, which still isn't terrible, it seems to me.
No, it isn't terrible, and it's consistent with the company's Q4 guidance. So I don't think there's any kind of change in momentum here relative to what the market's expecting. And when you look at it in isolation, October is their single largest ever quarter of revenue. So, this is a company that's kind of growing substantially. And kind of as you referenced there, there's still a huge amount of demand from companies like Nvidia. So, there's nothing here, I don't think, to be particularly concerned about.
So just curious about these wafers. Why is Nvidia still short of these wafers? It doesn't have enough to make the chips it needs?
Well, the way TSMC makes the chips on the wafers, and so then ultimately those chips then get plugged into Nvidia products. I think that's what Jensen's kind of referring to. And TSMC is essentially capacity constrained. And they're going to increase capacity maybe by 60 to 70% next year, but that still isn't going to be enough for the anticipated demand. And so Nvidia's now in a kind of a bit more of a kind of bidding war, if you like, for that TSMC capacity, because there are more up-and-coming competitors in the AI accelerator space, including, for example, AMD. So, he's having to kind of make sure that his relationship with TSMC remains strong, and that TSMC continue to see them as their priority customer, so that as the Nvidia demand grows, TSMC can kind of meet that with their own capacity.
Yeah, that's what I was going to ask. I mean, he's going to have to be a little bit more attractive now, I guess, to TSMC, but TSMC is going to want to keep a broad customer base and keep many of them happy. So, how does it prioritize who it gives these wafers to?
Yeah, I mean, it's a bit of a juggling act, isn't it? But I guess ultimately it comes down to, I guess, a mixture of kind of price and existing relationships. So, I think clearly TSMC does have some strong pricing power here, and it's going to be looking at the kind of longer term and, which customers it thinks have the kind of most solid foundation to kind of be partnering with, investing in, and how they can expand that partnership perhaps beyond just a kind of straightforward customer-supplier relationship, and, maybe help to kind of invest in additional capacity, whether that's in Taiwan or, for example, in the US, where obviously Donald Trump's administration is pushing even the likes of TSMC to kind of have local fabrication capability.
Matt, can we move to Apple, because we're reporting today that it's readying a new major satellite feature suite, let's say, for iPhones, and it's going to have that pretty soon. It sounds very exciting, but what kind of things could we be able to access via satellite that Apple is ready to offer us?
Yeah, so this whole kind of so-called direct-to-device trend, basically being able to kind of use satellite connectivity from your regular phone, is a really hot area across the world right now. We've got similar developments in Europe, for example, Vodafone and AST Space Mobile doing something. So Apple has had a long-term partnership with Global Star, which is one of the big satellite providers. Now, their capacity doesn't allow you to do a huge amount, and so I think there's perhaps the constraint here is perhaps more on the satellite connectivity side than it is on the device side. But for sure, Apple needs to do some development. Right now, there's enough bandwidth to allow them to kind of send short bursty SOS messages, which is an existing feature on the phone. The aspiration, I think, here would be able to kind of give you kind of much more kind of high bandwidth services, kind of so you can kind of use social media, for example, or ultimately do video calls. So I think there's kind of an evolution to go there. Certainly, if they continue with Global Star, they have limits in terms of how their satellite capability works. Compare that to AST Space Mobile, whose capacity as a satellite provider is specifically designed to work with existing 4 and 5G smartphones. But I think this is a trend we're going to see a huge amount of news about in 2026.
The post-AI trend, perhaps. Matt, thank you so much. Matt Bloxham of Bloomberg Intelligence joining us there. Let's take a look at how we're shaping up early this Monday morning. Well, it looks like we're in for a rebound. S&P Future is pointing to a gain of 1% at the open in just more than 4 hours. We have the dollar index just slightly lower, the 10-year yield rising across the board. We're seeing yields rise, the 10-year yield just above 4.12 right now, as the market perhaps starts shifting its attention to that potential December Fed rate cut. Coming up, we're going to have a look at what else was making headlines in your front page news. That's next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up on the New York Times, an appeals court ruling against Trump officials who were digging in on cutting food stamp payments to states. The move adding to the chaos surrounding the nation's largest anti-hunger program during the shutdown. Well, late last night, the court denied the administration's request to put on hold a district court order to fund SNAP in full for November. Next up, The Washington Post reporting more than 10,000 flights were delayed and 2,800 cancelled Sunday alone. It was the worst day of disruptions this shutdown. The Post cites Airlines for America, saying that more than 4 million passengers have been disrupted since the start of October.
2 weeks out as we get closer to Thanksgiving travel. Listen, I think what's going to happen is you're going to have air travel slow to a trickle. As everyone wants to travel to see their families, I think we're going to see air traffic controllers, very few of them coming to work, which means, yes, you'll have a few flights taking off and landing at our different airports across the country. But the thousands of flights that happen every day to move people around the country for this great American holiday, it's not going to happen.
And on the front page of the Financial Times this morning, U.S. broker Robinhood planning to give amateur investors access to a new fund. It'll consist of 5 or more private AI companies whose valuations have vastly increased. Robinhood CEO Vlad Tenev telling the FT he's more interested in giving, quote, normal people exposure than worrying whether a bubble is forming in the sector. All right, let's take a look at your markets this Monday morning. Futures very definitely pointed higher. S&P futures, Dow futures, Russell futures, NASDAQ futures, most importantly, pointing to gains of 1% or more. We do, though, have gold back above $4,000 as well. This shutdown story potentially ending this week if all the votes go in order and if there are no obstacles thrown up, if no senators say no. A lot to get through, but there is a potential path to the president signing the government reopen by Friday. Yields up across the board. With that said, the two-year yield still below 360 as the market potentially turns its attention now to the next FOMC meeting. 8 companies left to report this week. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. An end in sight. Democrats concede on healthcare, setting up for a potential government reopening. Those headlines improving risk appetite, plus Visa and MasterCard adding to market optimism this Monday. And mixed chip signals. TSMC's October sales grow at the slowest pace in 18 months, even as Nvidia asks for more chip wafers. So lots to be positive about this morning, it would seem, because we have futures pointed well higher. Now, we did have a down week on equity indices last week. It was the first down week in several, so lots of rebounding to do if the market so decides. S&P futures pointing to a gain of nearly 1%, and they've been pretty stable all morning. Still 4 hours to go, but we have NASDAQ 100 futures up 1.5%, and plenty of the major tech companies up big in pre-market trading. As for the bond universe, those shutdown ending headlines, and that's only potentially this week, they have bonds really just down ever so slightly, with yields up about 3 basis points across the board. And of course, the FOMC meeting now firmly in markets, on markets radar. We get plenty of Fed speak as well later on today. I do want to point out that we have gold rising as well as Bitcoin rising. It's above $106,000 a coin this morning, so make of all of that what you will. All right, let's get to some individual movers now for some stocks to watch. Here's Valerie Teitel.
Good morning, Ivani. Let's start with a check in the tech space. Nvidia rallying back from last week's losses, up nearly 3.5% in pre-market trade. And this comes after Nvidia had its worst week since mid-April. It was down 7% last week. We are erasing half of that, and that comes along this optimism that this U.S. government shutdown could be ending. We are seeing chip stocks, at least globally, trade positively so far this Monday morning. Let's now move on to M&A. Pfizer has agreed to buy the obesity startup Metsera in a deal that could be valued as much as $10 billion, but it puts to end a bidding war for the company. Pfizer was beating Novo Nordisk out for this deal. Now, Pfizer and Novo Nordisk, those shares are in the green, following the general optimism of the market, but Metsera is in the red, down nearly 15%. Bonnie, I think this is showing us that perhaps the market expected Novo Nordisk to amp up their bid this weekend. They did not. They declined to do so, meaning perhaps that bidding war is coming to an end, and that valuation for Metsera perhaps not going any higher. Next, let's move on to the video AI company Rumble. This is a competitor to YouTube, is more popular in the conservative spaces. The shares are up some 17%. They've agreed to acquire a German AI cloud company called Northern Data in a move that looks like that they're trying to boost their global AI capabilities. Rumble does do a lot of website hosting. They do host the more conservative-leaning social media network, Truth Social. So again, this could be seen as they're amping up their efforts in that AI-boosted space. Bonnie?
Yeah, could be turning out to be a deal Monday in the end. Valerie, thank you so much. Valerie Teitel there. Well, as risk appetite returns this Monday, Sonja Marten of DZ Bank writes this. The market is starting to rethink its pessimistic view on the U.S. economy, which is benefiting the U.S. dollar. As long as official data is not being released, this may continue to support the currency. Once the data does start coming out again, we may well be in for a big reality check. Sonja joins us now. She's head of FX and monetary policy research at DZ Bank. So, Sonja, why might we be in for a little bit of, a reality check? What data are you expecting to be disappointing?
Well, I think before the shutdown, we had quite a lot of data that pointed clearly towards a cool down of the US economy. And in particular, I think we have to mention the labor market data here. So we had seen some definite weakness in the labor market. And that's, of course, unlikely to have improved over the course of the last 40 days. So I do suspect that once we get official data, particularly from the labor market, the market may have to reassess its current view on the US economy, which I still feel very much they're operating on the assumption no news are good news. And I think that may well turn out to be wrong.
You know, the Fed chair talked about slowing down in foggy conditions, and we've seen plenty of Fed speakers sort of put the brakes on. Why is the market so convinced that we will still get a December cut?
Well, I mean, obviously, we're all moving in this sort of really weird data vacuum right now, and we're looking at alternative data. You know, there's obviously private data providers that we can look at, but we're sort of really operating in a vacuum here. And I think the Fed, what they're really doing is keeping its options open, because they have this problem that on one hand, there are inflationary pressures lurking. You know, we all know that tariffs will result in higher prices and already do so to some extent. On the other hand, the weakness of the labor market. And I think the market is sort of flipping back and forth between the view on a December cut, yes or no. That's been priced in and out a few times now. I'm still not convinced that they will cut in December. They may wait until the beginning of next year to do so. But I think the core message here is that the Fed will continue to cut rates well into next year.
Sonja, there's several political uncertainties out there. For one, the shutdown, it may end this week, paving the way for a reopening, next week. It may not. We also have the Supreme Court tariff decision, which, may come down on one side or the other. And we have this $2,000 dividend check that's not going to be a check, but maybe a tax cut. So much of that. How much of that will impact actual economic data?
Well, I mean, the shutdown, as we all know, will have an impact on growth in the US. And there's various estimates out there of how much that impact will be. There will be an impact. But I think as far as financial markets are concerned, the main goal is for this shutdown to be over. And normally what happens in these situations, we end up having a solution that will only last a while and not long term. But usually that'll be enough to appease the market who has taken this shutdown in stride anyway. I think the real question is how much other policies that Trump has implemented, particularly, of course, with regards to tariffs and, of course, the labor market, harsh immigration laws, and, of course, the tax policy. How much will that impact the U.S. economy? That's where we really have to look at. And I think it's, for many investors, currently very difficult to see a clear path ahead when it comes to this.
How much are you keeping an eye on the bond market for signals, Sonja? I mean, if, for example, that Supreme Court decision were to be against the administration, that would leave a bit of a hole, right?
Well, I'm not sure if the Supreme Court decision against Trump will make a huge difference, to be honest, because he may then have to cancel some tariffs that he had implemented previously. But I mean, we can, I think, rest very assured that he will find other ways to implement new tariffs. There are other ways he can do this. This Supreme Court decision, if it does go against Trump, it's not going to change the trade policy of this president. That is not going to go away.
Yeah, the trade policy definitely is here to stay in some form or another. So what does that mean then for the US dollar? Because we have seen, plenty of US dollar strength at times. And now there's also these other cross currents, the Bank of Japan looking at hiking and so on. Yeah.
Yes, it's been a very difficult environment. We had a very, very clear move, the first half of the year, euro dollar rising rapidly on the back of a weaker dollar, somewhat stronger euro. And of course, since then, we've had some more volatility. I think the dollar longer term will come under pressure again. I mean, for one, because I do believe that the shutdown, when it's over, will show that the US economy has continued to deteriorate to some extent. Also, I'm not bullish on the euro per se, but we have a massive fiscal package in the pipeline that's going to have an impact on growth in Europe, and sentiment there currently is very, very negative. So I do think euro dollar still has the potential to rise towards 120 or above when we look into the next year.
What about the yen? Because we're trading above 154 today. That's sending the Nikkei surging, for example. I'm sure companies are not too displeased, but at the same time, the Bank of Japan must be watching this very closely.
Yeah, it's a really difficult situation for them because they do want to hike rates. They have a very difficult situation when it comes to domestic inflation and the labor market. So it's a really tough time for the BOJ. They will not want dollar yen to continue to rise. There has been some verbal intervention already, and we expect there to be more should dollar yen continue to rise again towards 160, let's say. I think that's definitely an area where we have to watch out for the BOJ and the MOF to become more proactive. At the same time, obviously, they will want to be cautious. Donald Trump will be quick to point at any currency intervention as manipulation. So we'll have to see how that goes. But I think ultimately, when you look at dollar yen, I think that the medium-term view is still that it's going to decline.
Just bringing it back to the US, Sonja, I mean, if we don't get that cut in December, are we in for a bit of a market jolt?
Yeah, I think you might have some short-term reaction, definitely. But again, if the story is still that the Fed will cut rates and it's just a matter of timing, then I think we don't have to worry so much about a massive market reaction. I think the market currently is sort of unsure how far the Fed's going to go. And I think what people have sort of lost sight of a little bit here is I think it's the political component. There's a lot of pressure on the Fed to cut rates next year. There'll be significant changes when it comes to personnel. Powell will go. Lisa Cook may or may not stay. We don't know. Stephen Moran has to be replaced. So there's a lot of changes next year. And I think we can all agree that the Fed under Trump will be more on the dovish side. So I think that's going to shift back into focus as we enter 2026.
So we can assume, I suppose, that it's going to be more on the dovish side, as you said. But what about independence in general? Will that still be a market concern? Because it seems to have gone away a little bit for now.
It has, and to my great surprise, I have to say, I am surprised how complacent the market is about this. And in my view, what happens with Lisa Cook is absolutely crucial here. The Supreme Court will decide early next year on whether or not her firing was legal or not. If Trump gets away with this, firing her for something that happened, 25 years ago, I think that would set a very, very dangerous precedent and would open up the Fed to a lot more political influence going forward. And at that point, yes, the independence of the Fed will be definitely an issue that we'll be discussing next year.
And as we know, these things can turn on a dime in the marketplace. Sonja, thank you so much. Sonja Marten of DZ Bank. Now to other top stories trending on the terminal this morning. Diageo named a former Tesco and Unilever executive as its new CEO. Dave Lewis, who is known for his turnaround of British grocery Tesco, will begin the role January 1st. Shares of Diageo, maker of Johnnie Walker and Baileys, surged on the announcement. Visa and MasterCard are said to be close to reaching an agreement on a 2-decade spat with merchants. According to sources, the deal would involve making changes to lower interchange fees and loosen rules that require merchants to accept all Visa or MasterCard credit cards. Both companies declined to comment. And the BBC's Director General, Tim Davie, is resigning amid allegations the broadcaster misled viewers on remarks by President Trump. Those remarks were in a documentary that aired October 2024, where sections of a speech Trump made on January 6, 2021 were spliced together. Now, the controversy comes ahead of critical funding talks with the UK government. Coming up, a step closer to the end. The Senate will vote for a plan to stop the government shutdown. We'll discuss details next. This is Bloomberg.
On this vote, the yeas are 60 and the nays are 40. 3/5 of the Senate duly chosen and sworn, having voted in the affirmative. The motion upon reconsideration is agreed to.
The U.S. Senate voting 60-40 on a plan to advance a bill to end the government shutdown, with a group of moderate Democrats supporting the deal. With us now in Washington is Bloomberg's John Harney. So that was a procedural vote, John. That was late Sunday night, just a few hours ago. What can we expect this Monday morning?
Shutdowns, while they begin for different reasons, all seem to end the same way, in that the party that started it, in this case the Democrats, pretty much don't get what they want. Now, this accord deal had been more or less on the table for some time. The Senate and House, which will have to come back now, it's been away since September out of Washington, will vote to fund for a full year several departments, namely Agriculture, Veterans Affairs, and Congress itself, while other agencies will be funded through the end of January. There's also an agreement in which the Senate Republicans have agreed to vote on the health care subsidies that led to this shutdown in the first place, but there's no guarantee that those subsidies will be enacted.
And I guess, even If everything goes smoothly, the earliest that President Trump could be signing would be Friday. I guess that's the math at the moment. Now, elsewhere, President Trump suggesting a $2,000 tariff dividend to Americans. We had Treasury Secretary Scott Bessent speaking about those particular comments on ABC. Have a listen.
The $2,000 dividend could come in lots of forms, in lots of ways, George. It could be just the tax decreases that we are seeing on the president's agenda. No tax on tips, no tax on overtime, no tax on Social Security, deductibility of auto loans. So, those are substantial deductions that, are being financed in the tax bill.
It does seem like we're parsing words a little bit here. I mean, we know that all those are there already. Where is our $2,000 then, John?
That's a very good question. It certainly suggests. I mean, we don't know at this point. There could be some sort of money handed out, or maybe not. But what this does seem to suggest is that the administration is getting the message reflected in last Tuesday's very bad elections for the Republicans, that affordability, the ability to pay bills, pay for daily expenses is very much on the minds of Americans right now. And many voters who elected Donald Trump last fall, just a year ago, feel that he has perhaps not lived up to his promises to bring down inflation, bring down prices, as he promised to do.
Yeah, exactly, and you can see that in his Truth Social. So the other thing that we got was that federal layoffs have now been barred temporarily under the bill to end the shutdown. So does that mean that federal workers are safe, or is there a way around this potentially for the administration?
Well, there certainly could be. I mean, at least for now. The term "for now" seems to come up again and again and again with this administration. But for now, the workers will be coming back to work. Presumably, they will be the ones who are furloughed, that is, and those who, of course, continue to work without being paid. Will be paid and will be allowed to come back to their jobs. Other payments these vast number of payments that the government makes will begin flowing again. But this Russell Vought and others in the administration have shown that they have said openly that they're determined to reduce the size of government and that they're not done yet.
Yeah, exactly. So as you say, for now seems to be the watchword. The court system is also adjudicating a lot of these decisions, and late Sunday night we had an appeals court ruling that essentially makes the administration give the money to states that would pay SNAP benefits. They had been really digging in on this. They hadn't wanted to pay out that money to states, but it looks like that money will now be given out and will get to those who need it. Right, John?
Presumably. I mean, I think my understanding is that this could still go back to the Supreme Court. But yes, it looks like the payments will be made. Now, here again, we see how the shutdown is ending as it begins, as other shutdowns did, as it begins to affect the lives of American citizens. In this case, the 42 million people who rely on the Supplemental Nutrition Assistance Program, otherwise known as food stamps, for food and food aid. So the administration has, as you point out, tried to either say they didn't have the money or they were going to pay part of it here and there, but the judge said no, the payments have to be made in full starting now.
I read an incredible statistic. 1 in 8 Americans use SNAP benefits for grocery shopping. John, thank you so much. That is Bloomberg's John Harney in Washington. Turning to tech, TSMC shares higher in U.S. pre-market trading, the ADRs that is, even as the Taiwanese chipmaker posted a slowing monthly sales growth figure. That's all after Nvidia CEO said he had asked TSMC for more chip wafers to meet strong AI demand. For more, Matt Bloxham of Bloomberg Intelligence joins us now. So Matt, how should we read TSMC's October sales? Good or not so good because it's slowing?
Yeah, I think it's still pretty good, and it's consistent with the Q4 guidance they gave. So growth was about 16.9% in local currency terms. quite a big slowing from the previous month, where it's more like 30%. But as I said, that kind of 16 to 17% year-on-year growth is what's expected for the Q4 as a whole. And you have to kind of remember that October was their single largest ever period for revenue. So, momentum is still there, and it's still a rapidly expanding business.
Nvidia CEO asked TSMC for more wafers. It seems like there is just no end to these requests. I mean, at some point, are we going to find boxes of unused wafers or unused chips and, some ports somewhere? Or are these all going into devices?
This is all going into AI accelerators. You'll see Nvidia's main product, but also Apple smartphones and various other devices. And right now, the biggest issue that TSMC has is not demand, it's supply. They're really struggling to keep up with the capacity they need to deliver on all of the orders they're getting from Nvidia and Apple and everybody else. And I think that's going to continue into next year, even though they're planning to increase capacity by 60 to 70%. And so, there's a lot of people trying to curry favour with TSMC to make sure that they get as much of their orders fulfilled as possible. And as we've heard from Nvidia, they are seeing huge amounts of demand for their AI accelerators from the likes of OpenAI. So there's a kind of strong demand pipeline from them too in the near term.
Well, you mentioned Apple. Apparently it's readying this major new satellite feature now for iPhones. Should we be getting excited, Matt? What does this mean?
Yeah, I mean, I don't think you're going to see any huge transformation in the capabilities in the near term, but this so-called direct-to-device idea that's evolving quite rapidly, has already become part of the iPhone. So, you can make emergency SOS messages over the phone. You've been able to do that for a few models now, I think since the iPhone 14. I think, the plan would be to kind of extend beyond that to kind of more high bandwidth capabilities, but that needs their partner Globalstar to have a lot more capacity. So this is a multi-year project.
All right, exciting to watch out for. Matt Bloxham of Bloomberg Intelligence. This is Bloomberg. Now a look at what's ahead for the week. Start your week off with a little Fed speak, why not? St. Louis Fed President Musalem is speaking to Bloomberg today. That's at 9:30 a.m. Eastern. Tomorrow, of course, is Veterans Day, honouring all U.S. veterans, and the bond market does close in the U.S. for the Veterans Day holiday. And Disney is reporting its earnings before the bell on Thursday. That's one of just 8 companies reporting this week. A lot of eyeballs will be on Disney. Let's take a look at some micro movers. A lot of bouncing going on today. Nvidia, one of those companies, alongside other chip makers, after its worst weekly performance since mid-April. Then, of course, we have Metsera. It is down, although it had risen substantially. Pfizer agreeing to buy the weight loss drug startup for up to $86.25 a share. And Rumble up 26% after reaching a deal to acquire German AI infrastructure firm Northern Data. Here is your macro outlook for the day. This is Bloomberg.